Let's discuss this and more with Rohan Mandora, banking analyst. Rohan, I definitely want to talk about SBI and the whole Q1 banking performance. But even before we get that, can we just address that very newsy development from ICICI Bank before we talk earnings, of them increasing this minimum, account balance threshold? Do you see this as a positive overall or a negative?
Yeah, hi, good morning. Thanks for having me on the show. With respect to this news, I think it's slightly negative from a medium to long term perspective. Clearly, most banks have been focusing on a higher MEV customers as part of their strategy, but explicitly shunning the smaller MEV customers may not be a right thing to do. See, if you look at certain customer segments which are young in college, the first account that they open goes on to become a primary account over the next 5-10 years. And if you are missing out on those opportunities at this stage of time, it can have a medium-term implications on the CASA strategy of a bank. So that's where I think, from a focus perspective, this thing could still have been continued by tweaking the KRAs at a branch level, which most banks have been doing. And ICICI also had been following a strategy wherein whatever channel checks we did last year, we got to know that if a customer of say 10, 20,000 average minimum balance was willing to exit the relationship, ICICI Bank was not making efforts to retain them. So if those things were happening even earlier, maybe specifically calling it out that we don't want to focus on a smaller segment customers and as a strategy don't want to onboard them may not be a right thing to do is what we believe.
With salary accounts not part of this, Rohan, you think, I mean, if they would have looked at the data, right, in terms of where they're making money, where they're actually, what is the unprofitable segment in that sense, and what you said, right, you start working, open an account, and then sort of that becomes a primary account. I mean, those are salary accounts. What you're describing in that sense, right, Rohan?
Yes. So, see, from salary mandates, the minimum balance remains as zero. But see, in India, there's a good number of self-employed people also who have a decent balances in their bank accounts, and that is a segment that does not get covered under the salary account relationships. So that way, I think there's a good opportunity. College students, when they open their first account, the balances would be low, but typically when they join a workforce, if they are say having an HDFC or an IDFC first account, and if the employer gives them an option to continue with that, then they'll most likely continue with that account going ahead also. And earlier it used to be a mandate that every time you change a job, you open a new account. But now in the last few years, we have seen that when people are changing jobs, typically a large employer has relationship with more than one bank on the salary relationships. So those kind of accrual that happens, or the account opening that happens, even at salary opening level, that thing can change. So that's where I think from a medium to long term perspective, it can have an implications. On an immediate basis, obviously there will be no implications for ICICI Bank.
Yeah, absolutely. Actually, I completely take that point. And to second Nigel's point as well, I remember that many of us first account ended up being with ICICI, or any account. When you're young and you're opening an account with a bank, the tendency to close is not there unless you're being penalized at some point. Many times those relationships then go on to become far more durable, bigger relationships as well with any bank. But yeah, let's say that's ICICI's approach to it. Okay, so medium term, slightly negative, near term, not much of a reaction. Got that point, Rohan. Now let's come to earnings. Let's start with actually SBI itself. Numbers look really good. You just heard the commentary from Mr. Sethi. He's promising better margins by the end of the year. Unlike so many other lenders, so reassuring, right? No asset quality stress in SBI. What's your call on the stock? Or what's your general takeaway and your sense on larger banks, if not this stock per se?
So see, I think 1Q was a quarter wherein we have seen NIM compression. For 2Q, for most of the PSU banks, we would expect that NIM compression would be lower because the repo impact has been highest in 1Q for most PSU banks. For the private sector packs, we would see that second quarter will see a higher impact of repo transmission, because most of them were either on a month-end, quarter-end, or a rolling 3-month basis kind of a transmission, unlike PSUs which are on T+1. So 2Q would be slightly more challenging on NIMs for private sector banks. And as MD Sir said, for SBI, second half would see improvement in NIMs. So that's how we would also expect that 2Q should be more, one would see more pressure on NIMs on the second quarter, and second half onwards the recovery would come in. the few software aspects that came across in this results were clearly on asset quality side, which largely were focused on the smaller ticket secure segment, also like CV as well as small ticket lab. This becomes a monitorable. It would be good to understand incrementally from the management that is this an impact from the impact from, say, the MFIN 2.0 guidelines, wherein certain smaller ticket customers were not able to avail loans to be able to refinance their ongoing requirements. So that could be one implication that may be leading to this kind of thing. And plus, overall, the commentary is over leveraging and overall economy remains weak. So some implications of that could also be there.
Okay, all right. Thanks very much, Rohan. Good conversation. Short one, but helpful and crisp. Thanks for joining in.